Wow, did you see what happened with the stock market this week? It's like crazy how much it dropped.
Yeah, I know it's been pretty wild. The Sensex crashed over 4,000 points, which is a huge drop.
Okay, a 4,000 point drop. That sounds really significant. What exactly does that mean for us regular folks?
Well, it means that the overall value of many companies listed on the stock exchange has gone down, and lots of people are seeing the value of their investments decrease.
Oh, okay. So it's not just some abstract number, it impacts real people's investments. So, what caused such a huge plunge?
Right, there were a few big factors actually. The article I read mentioned five main drivers, and we can unpack them, yeah?
Okay, that sounds good. Let's start with the first one. What's the initial thing that pushed the markets down?
So, first, the US Federal Reserve changed its outlook on interest rate cuts. They're projecting fewer cuts than the market expected, you see.
Okay, so the US Fed is like a big deal, and their decisions affect our market.
Yeah, absolutely. Their hawkish guidance, as they called it, spooked investors, and that led to a sell off.
Ah, okay, so fewer rate cuts means investors are less optimistic. That makes sense. What's the next factor then?
The second major factor is foreign capital outflows. A stronger dollar and higher bond yields are making foreign investors pull their money out of India.
Okay, so foreign investors are basically taking their money and leaving. That definitely won't help our market, I guess.
Exactly, yeah. They've sold off Indian equities worth a huge amount in just the last few sessions.
Wow, that's a lot of money leaving the market. That's pretty significant. What about our own economy here? Is that playing a role?
Yeah, that's the third big factor, macroeconomic concerns. You see, the rupee is at an all time low and the trade deficit widened in November.
Ah, so a weak rupee and a big trade deficit. That doesn't sound good for our economy at all, right?
No, not at all. Plus, our GDP growth has slowed down for the third quarter in a row. That worries investors.
Okay, so weak economy, money leaving the country. Definitely a double whammy there. So far, we have US Fed, foreign outflows, and our economy. What's number four?
Well, the fourth factor is uncertainty over earnings recovery. After weak Q1 and Q2 earnings, everyone's waiting for the Q3 results.
So it's like all eyes are on the upcoming earnings, and people are kind of worried that they won't be good.
Right, yeah. Sticky inflation and high interest rates are making the market skeptical about a quick turnaround in profits.
Okay, that makes sense. So the market's worried that companies aren't going to be making enough money in the near future. One more left?
Yes, finally. The fifth thing is the poor performance of heavyweight sectors. Sectors like banking, IT, and financials aren't doing so well.
So the big players aren't performing up to expectations, and that's dragging the whole market down with them, right?
Exactly, yeah. When the major sectors aren't doing well, it creates a lot of market weakness.
Okay, so just to quickly recap, the main reasons for the market crash are US Fed changes, foreign capital outflow, weak economy, uncertain earnings, and bad performance from major sectors. Got it?
Yeah, you nailed it. Those five things in combination have really impacted the market this week.
Okay, that's a lot to take in. So the big question is, what does this all mean for like the near future?
Well, it's hard to say for sure, but this volatility suggests we might see some continued uncertainty in the market for a bit.
So it's not likely things will just snap back to where they were immediately, you're saying?
Probably not. There will likely be a period of adjustment as the market reacts to all these factors.
Okay, so buckle up for a bumpy ride, as they say. Are there any bright spots in all this?
Well, some experts are expecting a recovery in the Q3 earnings. So that's one potential positive, yeah.
Okay, so there's a glimmer of hope with the Q3 results. Hopefully, they'll actually show some improvement.
Yeah, and it's also worth remembering that markets go through cycles. They do go up and down.
Yeah, that's true. It's not always doom and gloom. Still, it is a little concerning to see such a big drop.
Totally, it is concerning. But understanding the factors behind it, like we just discussed, helps to make sense of it all.
Yeah, that's true. It's good to know why things are happening instead of just panicking.
Exactly. And it helps to make more informed decisions or just to know what's going on in general.
All right, well, I guess we just have to keep an eye on things and see how it plays out, huh?
Yeah, pretty much. We'll see how the markets react to the upcoming Q3 earnings and how the Fed moves going forward, right?
Okay, well, this has been very helpful in understanding the situation. Thanks for breaking it down so clearly.
No problem. Happy to chat about it. It's always good to stay informed about these things.